Hi, everybody, and welcome to the October 20th issue of the Tucson Mortgage Weekly. I'm Todd Abelson. Thanks for tuning in for just a few minutes. Let's kind of go through. Obviously, we're all aware of the fun and games, as I like to call it, Mr. Toad's wild ride last week with the stock market up and down and up and down. Kind of makes you nauseous. There was a lot of scare over Ebola, and all of the talking heads were saying, don't worry about it because it has nothing to do with earnings reports or real technicals. And then yesterday IBM came out with some lousy numbers, and then this morning McDonald's and Pepsi came out with lousy numbers, and the stock market tanked, and now it's back. Obviously, here it is Tuesday. I'm a day late on the newsletter, but the stock market has clearly raced back. And so let's put that on hold for a minute while we talk about a couple of other things. Well, this morning, the Federal Housing Finance Administration, that's the group that basically controls Fannie and Freddie, came out and basically said or implied that, gee, maybe we've gone a little overboard and we need to loosen up some of these guidelines a bit to let more people buy houses. They're talking about doing things like maybe reducing the minimum down payment from 5% back to 3%. That would be great. That's a program that, although it was expensive, it was very useful. They're not necessarily talking about lowering FICO guidelines much below about 620 or thereabouts, but they would potentially make it easier to get a loan. So we'll kind of sort of have to see how that rolls out. They're announcing supposedly some clarity over the next couple of weeks, so we should be hearing a little bit about that. Then today, some important news came out. The existing home sales, and while some people were saying, gee, this is really bad, overall it was a pretty good report. It was showing that as far as the last monthly sales being down, overall for the year, sales have been up and appreciation's been up a meager 2.6%. Now, I don't know about you, but 2 to 3% is exactly where we want appreciation to be on home prices. If they start going up much above that, we could be looking at some really inflationary pressures relative to house prices, which caused the bubble that we just kind of sort of got finished with. But here's some of the other important statistics that came out. First of all, distressed sales, the level of sales that were categorized as distressed, were down to about 10% of the total from a peak of 30% when things were really, really bad. So that's, fabulous news, fewer and fewer distressed sales. That also, the other thing that goes along with that is the percentage of all cash sales is down to about 24%, up from a peak of about 36%. 24% being closer to realistic, but boy, that 36% number last year was just brutal. And that's, of course, indicative of the fact that the distressed sales are down, because who buys distressed sales? Investors. What do they use? Cash. So that's a very good sign. That means that people that are buying homes are not investors. Typically they're going to be homeowners. And then the last statistic is that first-time home buyers accounted for about 25% of the total sales. Now, that's a pretty good number, but it needs to be increased. We must get new home buyers back in the market, because that's the basics. That's the beginning of the conveyor belt for the whole industry improving. So here, what are we looking at? Well, interest rates are great, but that's partially because of the stock market. And right now, with what's going on with stocks back on a tear, gee, if they do much better than they are, we're going to see rates start pushing back up to where they were before the lunacy a week or 2 weeks ago. Not that they were bad, but I like 3 point something rather than 4 point something, and we're already in the low 4 something. We could be pushing back up to the mid 4 somethings, strictly because the stock market's on a tear. So, bottom line, keep your ears open, watch for the stock market, keep an eye on oil, because oil will tell you what interest rates are doing. Don't forget to tune into the blog site, TucsonMortgages.com. I'm Todd Abelson. Make it a great day. Bye-bye.